right, good day traders. This is your free video update from Seasonal Swing Trader, and want to bring to your attention a few markets that you could consider adding to your watch list, and I'll tell you the reason why. Now, a lot of people right now that I'm talking to, both inside our community as well as those on the outside, are certainly cautious of the expectations of the future direction of the equity market. Now, we know seasonally we are entering a very favorable time of the year for U.S. markets and some key sectors as well. But this year, of course, is a little different than the norm. We still have a lot of unknowns. Now today, as of this recording, we closed up about 1% in the equities and are still lurching around all-time highs. But what I like to make an argument for is those that either are hesitant of participating in the equity markets, or if you want to add or consider different asset classes that are not as correlated as what the broader markets are doing, then I say you need to take a look at the commodity markets. Now, a lot of people immediately pucker up when you talk about commodities and futures, and they think about the risk involved. Well, I would say the risks are just as great in the equity market if you don't manage your risk. So risk management is first and foremost, regardless of what market you're trading. But my point is, if the uncertainty in the equity markets have you on the sidelines, or maybe you have some extra cash in your portfolios, you may want to take a look at the commodity markets, because they present some really good opportunities time and time again, week after week, month after month, especially when you use a combination of both high probability seasonal analysis as well as high probability technical analysis. So what are these markets or these asset classes that I'm talking about today? It's the grain complex. In particular, we're talking about the bean complex, soybeans, soybean meal, soybean oil. Now, yes, those will all have a little bit of correlation, as well as the other major grain markets such as wheat and corn. We'll take a look at wheat as well. But they do have some nuances amongst each other, and that's for another discussion. So let's take a look at soybeans. This is a daily chart of the continuous contract, and we're going to be focusing on and I've just drilled down to a weekly. And keep in mind that any analysis done here is on a continuous contract basis. So as far as tradable months, you can trade the Jan or the March contracts. I'll be looking at the March contracts to give me some more time. Simply put, drilling down from a higher time frame analysis, looking at a weekly chart here on beans, you can see that we're running up into significant areas of resistance. Now, if we go down to a daily chart, we want to see dailies run into areas of weeklies, which is what we get right here. Same thing on soybean meal. If we go to a continuous contract of soy meal, this is a weekly chart. Again, we're running into long-term weekly price structure. Let's go to soy meal, and we'll see the exact same thing occurring, running into long-term weekly price structure. Now, that's all good and great, but that is not our final confirmation. Now, as I've already said, each of these markets have their different nuances, meaning they've got different things going on in regards to planting and fundamentals, as well as contract values. But in essence, we are basically looking at the same technical pattern as well as seasonality. So the harvest months for corn and soybeans are November and December. And when this newly harvested crop comes to market, the supply is generally higher. That's why they call it the new crop. So around this time frame, we typically see a decline heading into February, or what's called the February break. And then we look to see higher prices before making a peak in the summer months, and that is a seasonal trade that is also on our radar year after year. So what does all this mean from a seasonal standpoint? Well, if we know that we're running into long-term resistance on weekly and daily charts, also pressing into 50% retracements, maybe 618 or 786 retracements using basic Fibonacci calculations. We also can see this from a visual perspective by looking at the longer term price patterns. So here are 5, 15, and 30-year historical price averages The 5-year is great, but I do like to pay a little bit more focus to the 15 and 30 year because those are the black and purple lines. It encompasses more data. So what we're looking at is this confluence here. Beans, you see, not as weak, but they do tend to break down here into February, as I just mentioned. And then if we look at soybean meal, you can see right here in December, you can see the 15 and 30 year do tend to trade to the upside, while the 5-year has a bit of disparity to the downside. But we find that peaking pattern coming down into January with a bump up, and then that final low being made in Feb. And then we go to March oil. It's a little bit more definitive here with the price decline starting a little bit sooner. And then lastly, here on wheat with the 30, 15, and 5-year trading weaker into the downside. Now, we like to use our smart market scanner to find these types of trades. So whether you back into it from a pure chart perspective, just scrolling through quotes, or if you start with the smart market scanner and locate these yourselves and then confirm on the chart, that's the way that we like to play these trades. So here I've got a few trades queued up: soybean meal, soybean oil, soybeans, as well as wheat. Now, we didn't take a look at the wheat contract. This is one that's been on our radar for quite some time. I think it was actually included in one of these videos here, but we had a head shoulders top at key resistance at a key period of seasonality, and we're looking for moves from 600 down to about 550, 560. Each penny being $50, that's a $2,500 per contract move. So I would not recommend getting into all of these. Now, I am positioned currently in meal, oil, and beans. I'm waiting for a retracement on wheat, and I'm watching corn closely for extra confirmation. But if you have this tool at your disposal, you can drill down and see all of the stats in much more detail and determine if it meets your risk-reward parameters, which you can see all these have an 86% win rate over 7 years of data. Now, going back to those that are worried about having to open a futures account or commodity account, no worries there. There are plenty of decently liquid commodity ETFs that you can trade. WEAT in the ETF market that tracks wheat, SOYB that tracks beans, and CORN or corn that tracks corn. So add these to your radar. We just issued some trade ideas to the members of our community this afternoon. We'll be watching these closely with some other key markets heading into the holiday season. So good luck, good trading, and we'll see you on the next update.